Holy smokers, this ain't no dang jokers. We got two core subjects to get into in this video here today, folks. Well, first off, I'm going to clear the air about the last two videos. I want to explain something very important in regards to those last two videos and kind of clear the air in regards to that situation. The second thing we're going to get into in today's video is a very fun subject. We're going to talk about if I was forced to go all in one stock for the next 1 year, what stock would that be? The next 3 years, what stock would that be? And the next 5 years, what stock that would be? So I thought that was a really fun subject to get into. And by the way, it was not as fun as I thought when I was preparing it, because I'm just looking at my iPad screen, just like it's like choosing like who's your favorite kids. Like it's brutal. It was absolutely brutal. So anyways, we're gonna play that game here today. I'll show you guys exactly what stocks I'm talking about. Now, yesterday I gave you guys an option. I said if you want to tap the like button like a little fairy, you can. And I saw there was a pretty good amount of you guys that you prefer to tap the like button like a little fairy. There goes the pink Lambo. Ooh, it's nice. And then there's some of you guys out there that you like to Hulk smash it. So I'm not gonna judge. I would never judge you. You do what you want to do. You want to tap it like a fairy, you do that. You do a Hulk smash, you do that. That's your personality. I just appreciate everybody making sure you hit that like button. I don't care how you do it. Just make sure you do it, okay? That's all that matters in the end. Appreciate y'all being here. If you want to learn from me on the deepest level, get access to all my courses, Discord chat, see the moves I'm making each and every week in my $2 million plus Fidelity account. You can join the private group, apply to join us in there. Click on the pinned comment, fill out an application. We'll see if we can get you in there next week, okay? Alrighty, guys. So I want to clear the air in regards to the last two videos. I thought this was important to do right off the bat here because obviously those two back-to-back videos could come across as like, oh boy, Jeremy's starting to go bearish, right? Jeremy's going to become a big bear. Button the hatches. That means bad stuff is coming here down the pipe now that Jeremy's going bearish. At least that's what it could come across, right? Well, I'll put it to you like this. I think this is the best analogy I could give here, right? You ever heard the expression, pick the fruit that's easiest to pick off of an orange tree or something like that, right? And the easiest fruit is right there. It's not like at the top where you got to get a ladder or way it deep in the tree or something like that. It's the easy fruit to get right there, right? Well, in the stock market, here's the deal, okay? We've gotten the easy fruit now at this point in time. So now we have to try to get out the ladder and get to that other fruit and go deep in the tree, and we might get a stick in our eye. Now we're at the tough part of this game. This was easy. We were pulling the fruit from right here, okay? Now to show you this is very, very important here, okay? Look at the great financial crisis, for example, right? The easy part was getting back to our old previous highs. Now, from there, the market had a lot of trouble over the next good period of time there once we got back to those old highs. Then we basically flatlined, and then we actually went down quite significantly. And there was a lot of fear about a double dip recession during that particular time period, right? And then we never had the double dip recession, and the economy just expanded. Unemployment kept dropping and dropping and dropping as the years went along. Earnings kept going up, and man, we were off to the races, and that was great. But once we got back to those old highs, that's where we ran into trouble. And so a very similar phenomenon could likely happen now in the stock market because we did the easy part. We've done the easy part now at this point in time. This right here, that's the easy part. Going from where we were at in 2022 to where we're at basically back at the old highs here in 2024, that was the easy part. I don't know if you guys have ever, done sports or something like that. Imagine you run 3 times a week. Every single week for a year, right? You're going to get a certain amount of time. You're going to probably be pretty fast at whatever you do. You run a 1 mile, whatever, right? Then you take a year off. And then you come back and start again after you took a year off, right? The easiest part is to get back to where you used to be. Now, the hard part is trying to get faster than you used to be. That's difficult. That's very, very difficult. And the same thing in the stock market, right? Now, on top of that, we have a PE ratio here that the only time periods we've really seen it above this in the past 30 years is during the great financial crisis, during the tech bubble, and during the 2021 bubble, right? So that's not ideal. That's not ideal from kind of a valuation perspective, right? On top of that, we've had 20 straight weeks running hot in terms of bullish activity. If you look at the AI investor sentiment score here, we've been extremely bullish. Almost every single week's 40 plus. And look at some of these weeks. 51%, 52.9% bullish. And this is bullish over the next 6 months, right? And the bears are in complete hibernation all winter. The bears have been in hibernation literally since November. And it was fascinating because while I was doing this, I Googled, like, when do bears actually wake up from their hibernation? Because I was kind of curious about that. And, obviously it's not like there's a set day that they say, okay, today's the day. But from late November to mid-April, this sounds a lot like stock market bears this year, right? Where they've basically been in hibernation. They're going to come back out pretty soon here, but they had been in hibernation for a bit, right? Here's the deal. This is very important. Everybody understands this. We need major economic expansion over this next 2 to 3 years to get more large upside in the overall market, okay? Now, we don't only need that. We also need inflation to die completely. Not like dying. I'm talking about dead. We need inflation done. We also need a Fed that will become accommodative to the markets and the economy. And on top of that, we need global powers to get along and not to fight and cause drama, right? Now, if we look back to one of the most epic bull runs we had in history, and it's definitely my favorite bull run, 2009 through 2019, it was an amazing bull run. But why did we have that bull run? You got to ask yourself. Well, we had all of those things all going on at the same exact time. Massive economic expansion, right? And a lot of that was just bringing unemployment down over time and just what that did to the economy. Also, inflation was non-existent during that basically 10-year span. Inflation, there's always going to be inflation, right? But it was never, during that 10-year span there, that decade, there was never like, oh my gosh, inflation's a real problem like it has been for the past several years. Really, we're going on 3 years of big inflation, in my personal opinion, right? We had a Fed that was very accommodative during that entire time period, basically. They raised rates in 2018 a bit, and then they just dropped them back down. And also global powers, the big dogs, we all got along during that particular time period. So if we're going to talk about not only going from where we were at, right? This is basically this chart here, right? Back to old days. But now if we're talking about an explosion of the NASDAQ to 20,000, 25,000, 35,000 over the next few years, we need all of this to play out simultaneously, right? And that's where you start to begin like, ooh, are we really going to have major economic expansion over the next 2 to 3 years? Are all the global powers really going to get along over the next few years? Are we really going to have a Fed that's accommodative over the next few years? And can we get inflation to die, right? And can we get inflation to die without a recession? That usually doesn't happen, right? That's where we're talking here, right? And so when I look at this overall, the moral of the story is, if we're talking about major market upside, it just doesn't look like it's there, okay? But with that being said, there's good deals on certain stocks in the market. It's just, in terms of that overall market push, I think it's going to be very, very tough at this point in time. And that's kind of the moral of the story in regards to that. So I just want to kind of clear the air. I'll be buying stocks tomorrow. There's a lot of good deals out there. There's a lot of stocks I think are going to do well over the next few years, but I think the market in general is going to be very tough sledding unless we can get some major economic expansion and get inflation to die over this next few years, okay? So now, and by the way, that can completely change. Imagine we got a nice correction in the market. Boom, kill down commodities, open up deals in the market. Boom, let's buy. Things can change quick in the market, okay? Now, let's talk about the core subject of today's video. If I was forced to go all in one stock for the next 1, 3, 5 years, what stock would I pick, right? First, I think I need to give this disclaimer out there. Never going all in one stock. You got to be flipping my flapjacks, okay? I mean, if I was forced to really do this, I'd have to put in the S&P 500 or something like that, right? Obviously, we're playing an individual stock game today. We're going to have some fun with this. But, I mean, if you force me, I would have to go S&P 500, right? But overall, it's very dangerous to go all in one stock. So I think everybody needs to understand that before we get into this. Even if you get that stock right, you try to do it again. Next thing you know, that one doesn't work out, right? So looking at the public count here, right, the way I want to start this game is there's certain positions that are easy eliminations. Like they're not going to be in factoring going all in for 1 year, 3 year, or 5 year in this exercise, right? So what are the ones I would easily eliminate that just couldn't even be part of this, okay? Revolve, I would eliminate. That one just can't be in there. It's not a stock I could feel comfortable being all in. Fubo, same exact thing. I mean, yeah, it's got huge upside, but I couldn't even feel comfortable being all in Fubo for a day. Never mind Never mind a year or 3 years or 5 years. No way. Okay. SoFi, same exact situation. Planet, same exact situation. Chipotle, Toll Brothers, no. Okay. I mean, maybe we could make some handsome money there if the market goes down substantially over the next year or two, but still, no. Okay. I'm not risking everything on those, right? So those are the for sure no's. So from there, let's talk 1 year. Okay. So if I had to eliminate from there for 1 year, I would eliminate Tesla, first off. Tesla, I think margins are going to go back up in the back half of the year, and I think that's going to be very bullish for the stock, right? But I think there's probably going to still be this overwhelming perspective probably from the market over this next year of worrying about like demand, essentially. Oh, Tesla's got no demand. And so even if their margins come back in the back half of the year, like I think they're going to come back, there'll still be like, oh, Tesla can't grow, blah, blah, blah. Like that's going to be kind of a lot of the sentiment, I still think, for a lot of this year, right? Elf on a shelf. The thing that worries me about 1 year on Elf is if they just report one quarter that the numbers weren't quite there, the stock could get crushed epically. Like I'm talking 20, 30% quick, if they missed any sort of numbers over this year because it's trading at a very high valuation, right? Cheesecake Factory, I think they're going to have a good year, but at the same time, I don't know. Is everything magically changed in regards to cake and in regards to how people view that stock on Wall Street? I'm not sure about that. Nike, although I'm very confident in Nike's 2025 and beyond numbers, this year is kind of setting up for, Nike's basically positioning themselves for 2025 and 2026 and beyond. So that doesn't make Nike as exciting of an opportunity for a lot of Wall Street this year, right? So those would be kind of the ones I would eliminate from there, okay? So that leaves us with NVIDIA, Palantir, Amazon, PayPal, and Meta. So now I need to eliminate 3 more, and then we'll see which one wins. I would eliminate Meta. I mean, there's a lot of negativity around big tech right now with some of the government stuff that's going on right now. And, the EU is now looking in the big tech companies and trying to crack down. So that's going to probably be something that weighs on the big tech for a little bit here in the short term, right? PayPal, and by the way, and also Apple's one of the biggest big techs out there, usually number 2. And Apple, I mean, from what I just heard, 30% plus units down in China. I mean, gosh, it could be, Apple could definitely work against the market and the Qs in the short term here, right? So that could pull back on a Meta. PayPal, I'm pretty confident in this next year in PayPal. But with that being said, it doesn't quite beat out these other stocks. Amazon, pretty confident in this one over this year. I think AWS growth is going to accelerate. I think e-commerce is going to be strong. I think advertising is going to be strong. But with that being said, the 2 strongest ones for the next year is Palantir and NVIDIA, right? Both those are great companies, profitable, great balance sheets. So if I had to say which one would be the best for the next year, that stock would be NVIDIA. NVIDIA would be the winner chicken dinner. It is a hard pick between Palantir and NVIDIA. I think both set up tremendous. I think Palantir could put up a phenomenal year this year in terms of AIP growth and what that does to their commercial business, specifically in the US. With that being said, Europe has been very slow adopting anything AI related, so that could weigh on the business. Government contracts, are up and down. So it looks like government contracts are starting to go in the right direction in regards to Palantir, but that could obviously change. But NVIDIA is just the easiest setup. I mean, you got the valuations pretty attractive forward PE wise, and I just know they're going to put up great numbers quarter in and quarter out for this company. I'd be shocked if they don't just continue to put up epic numbers quarter in and quarter out. When you think about the chips that are coming in the back half of the year, when you think about the software opportunity for this company, I think they set up pretty darn well. So yeah, if I just had to say 1 year, I would go NVIDIA. Alrighty, so let's go 3 years, okay? Now 3 years, I got to factor in a few things. I think there's a decent probability of an unemployment-related recession at some point in the next 3 years. I also think there's a decent probability we could have a second batch of inflation in the next 3 years, which puts a whole different type of risk in the market, right? And I also think there's a potential of a strong economy where real wages tick up substantially over the next few years, right? So I got to factor in all 3 of those different scenarios into this kind of 3-year thought process here. So for 3 year, I would eliminate Meta from this one. I would eliminate Elf on a Shelf from this one as well. Just, what if they had a bad number over the next year or something like that? Or what if next year's Elf numbers were not quite there? What would that mean for the stock price of Elf, right? Amazon, I would take that one out. Palantir as well. What if Palantir, what if this AI excitement, what if that did die down over this next, let's say next year or something like that? Or what if the recession hits and then companies see a company like Palantir and they're like, man, your software looks great, but right now we just don't have the budget for it. And Palantir's like, hey man, we're going to save you a certain amount of money. But if people are in scarcity mentality, they just don't want to spend on anything. And so what if that was to happen, right? That could obviously hurt a company like Palantir quite a bit in the short term if you had some sort of recessionary scenario play out, right? Cake, I would eliminate them. I would eliminate Nike, and I would eliminate NVIDIA, because I think there's a decent probability NVIDIA will have that day of reckoning at some point in this next 3 years. Probably not this year, maybe not even next year, but at some point the growth rate will slow substantially and everybody's going to freak out in regards to NVIDIA. And that will be the moment where NVIDIA stock will actually go down. The bears have wanted to go down last year. They want to go down this year. They might be waiting a bit, okay? NVIDIA will have that day of reckoning, but it might be a bit of time. You might have to wait a bit here. Maybe it's in a recession, right? And let's say companies like Meta, Google, Microsoft, and others, let's say recession hits, their revenues downtrend, something like that, and all of a sudden they're not placing as many orders for NVIDIA, right? And maybe the market gets more competitive by that particular time. You can play all those sorts of things out in that story, right? So that leaves us with PayPal and Tesla as my favorite stocks for the next 3 years specifically, right? Well, from there, I would have to eliminate PayPal because I think Tesla's next 3 years is too exciting. And I mean, it's a winner chicken dinner because at the end of the day, we've got a company here where Cybertruck is going to fully ramp over this next year, right? And that has unlimited demand forever. I don't want to say forever, but for many years, right? Model 2 will be in the market at some point in time during that 3-year span. It's just a question of a year from now, 2 years from now, or is it more toward the 3-year mark, right? And I'm 100% convinced that FSD will be 100% solved within the next 3 years, probably in the next 12 to 18 months. The progress I'm seeing from Tesla now at this point in time is insane. So the moral of the story is I would say Tesla probably sets up the best for the next 3 years specifically. It has a lot of things going for it. And as margins come back, right, like I think they are over the back half of the year and then into future years, I think that's going to be big, big, big for Tesla. So they're the winner chicken dinner for 3 years. What about 5 years? Okay. All right. Let's play this game. Okay. Now, this is where it gets really hard. I was going to be honest. This was the hardest one for me. The easiest one was 1 year. That was the easiest one for me to figure out. 3 year, I thought that was a little bit difficult. 5 year was brutal. I mean, this is where the majority of my time went because you got to understand, as a long-term investor, I'm always thinking 3 to 7 years out. But ideally, I'm thinking 5 years out in regards to company. That's what I can realistically see. But the problem is, every stock I hold, I think is going to be great over the next 5 years, right? And so this is where it's like absolutely brutal because there's some stocks that you hold sometimes. I'm like, ooh, I don't really like the setup for the next year. It's more of a buying opportunity in that stock. That's easier. But 5 years, I like everything. Are you kidding me? So this one got hard. So the ones I would have to eliminate for this one would be Amazon. I would have to eliminate Cheesecake for this one. And I would have to eliminate Nike. And once again, I love all 3 of those stocks for the next 5 years. I think they're going to perform phenomenal. But if you're forcing me, those would be the 3 I would have to eliminate right off the bat. From there, what am I doing? Like I said, this is brutal. From there, I would have to eliminate Meta, believe it or not. Yes, Meta. I would have to eliminate that because what if Apple was to put on some more changes that hurt Meta? I have to think about that over the next 5 years, right? The problem is Apple holds so much weight still in regards to, because, how are all these people using Meta, right? How are all these people using Facebook, Threads, Instagram, WhatsApp? A lot of them are using it through iOS or they're using it through Android. And the other threat is, what if Google did something to hurt Meta, right? Change something in their App Store policies that really hurt Meta's business model or something like that. It's something I got to consider there. So I would have to eliminate that one, plus this government scrutiny on all these big techs as well. I would have to eliminate PayPal, although I really like PayPal's setup. That's another one that, well, what if I'm wrong in regards to payments going through PayPal, Venmo? What if, everybody's just using Apple Pay and Google Pay and, I don't know, like the bear case comes true in regards to PayPal, right? Palantir, I'd have to eliminate that one. What if AIP hype dies down, AI hype and excitement dies down, people aren't interested in that in the next 5 years? I don't think that's very realistic, but let's play it as a game, right? And then NVIDIA, I would have to eliminate them as well, which is very tough. So that would leave me Tesla and ELF, right? And it's more just kind of the belief in Tesla and ELF over the next 5 years versus some of these other stocks, right? So who's the winner, chicken dinner, and why are they the chicken dinner here, okay? This is brutal. Elf on a Shelf, believe it or not, won the battle. It won the war. It won the war. I'm shocked, honestly. When I really played this game out, I was shocked to see Elf win the war in the end. Yes, it even beat out good old Tesla, my Tesla. And the reason it did, okay, is a few reasons, but the main reason it did is Elf's the most consistent great company in the market. It's the best. It's better than NVIDIA. It's better than AMD. It's better than Tesla. It's better than Meta. It's just better for the last 5 years. There's no company that has been putting up this sort of growth quarter in, quarter out. NVIDIA can go through ups and downs. I mean, NVIDIA's business model a year and a half ago, people thought was in a horrible place. 18 months ago, 16 months ago. AMD, same exact thing, right? Those businesses can be up and down. Tesla, everybody's been bearish on Tesla for the last, at least year and a half now at this point in time, right? If not 2 years, been bearish on Tesla. So we know Tesla goes through ups and downs. Meta, somebody sold me Meta shares $88.94 back in, what was that, November of 2022? So those businesses go through these kind of ups and downs. Things are looking great. Things are looking horrible. And then you got ELF with 3%, 7%, 11%, 8%, 16%, 8%, 7%, 10%, 24%, 50% growth. They just put up these insane numbers. And when I look at this company, they talk about one out of 5 companies out of 274 with 20 quarters of 20% growth, right? I was looking at this most recently. This was on their Instagram yesterday, and they had this new launch with Liquid Death, completely random. And, it was just kind of insane. It's the type of stuff that goes viral. And, I'm looking at the comments under the video. How's it sold out in 25 minutes? They sold out of everything they had in 25 minutes. This person says, sold out already. This person says, how did it sell out so fast? Please restock. This person says, sold out when it was in my cart. This person says, $34? Dang! What happened to being affordable? I looked at that comment and I said, uh-oh, here's the deal, okay? Just when you think Elf's margins can't get any better, the thing is, Elf's products are usually so flip and flapjack and affordable that they have room to move up price quite a bit over this next few years if they want to choose to do so, okay? And so that's just a little food for thought in regards to that. People think Elf's margins can't go any further. And I'm looking at them and I'm like, you guys realize how affordable these products are, that they could easily move up the price 50 cents here, $1 here, $2 here. And what that does for the company's margins is like a night and day difference. What it does for the company's bottom line is like a night and day difference. It's insane. If you talk about Elf was to move every product up $1, which I honestly, my personal opinion, I think they could do it. And I don't think they would sell any less. But if they did that, do you know what that extra dollar per item would do to their bottom line? Oh my gosh, okay? Please do another drop. It's sold out. When's the restock, right? That's Elf. It's just insane. This is just a company on a different level executing better than anybody else is executing. They just are. I don't know the other way to put it. They're a 101. That's the best way to put it. They're a 101. And who's going to stop them over this next 5 years, right? The good news for Elf is they don't have to deal with, and by the way, they got world domination coming. They're just starting to expand internationally. And because their products go so viral on TikTok, Instagram, the market's already there for them. Wherever they want to go, they want to expand into Europe huge over this next, we can call it 3 years, 5 years. It's cake for them. It's easy for them. There's already a huge customer base there. It's not like there's some new brand no one's ever heard of us. We got to try to build up clientele over the next 10 years. No, people already want Elf's products in Europe. They already want Elf's products in France and in England and in India. They already want in China. They already want Elf's products all over the world because of going viral all over social media all the time, right? And so that's just a little food for thought in regards to that. And they don't really have any gatekeepers. You know, like Meta, I talked about Meta earlier. They have gatekeepers they have to deal with, right? Google and Apple, they are the gatekeepers, iOS and Android. And so if they did something negative, it could definitely affect a company like Meta. It has before, right? Tesla has to deal with interest rates and the economy, right? It has to deal with two sides. If the economy was to tank, that wouldn't be great for Tesla, right? If interest rates are stayed very elevated, that's not great for Tesla. So they have to deal with that, right? Companies like NVIDIA and Palantir, I love them so much, but they at some point, maybe AI starts to die down a bit, a year from now, 2 years from now, right? And, these things go through waves, just like EVs, right? Everybody and the grandma seemed like it was going to get an EV, and then EV demand slowed way down, right? I think the long-term trend is very clear, but in the short term, it's slowed down. Same thing could happen to an NVIDIA or a Palantir a year from now, 2 years from now, where it's like their demand's crazy in 2024, maybe it leads into 2025, and then all of a sudden, at some point in 2025, all of a sudden, numbers start to slow a bit, and people are like, whoa, what's going on here, right? And then you're in that period of trying to figure out, is this disbelief, is this real, like what's going on here, right? And so, Amazon, consistent, great company, but we've actually seen the deceleration massively of AWS. So, this is like, it's kind of like picking who's the best quarterback or who's the best player at a sport, where you're looking at it and you're like, you're trying to nitpick these things. But at the end of the day, it actually came back to Elf being the most confident in that one. And in a recession, Elf is going to do just amazing because their products are so affordable. And people still going to buy makeup in a recession. It doesn't matter. High inflation, Elf dealt with high inflation as good as any company in the world. I mean, it was unbelievable the way they dealt with inflation, right? And so a strong economy, they're going to be just fine in that as well. That just gives them more leverage to, if they want to up price 50 cents, $1, $2 an item here and there, they can do that. And what that will do, their bottom line, they'll eat up that forward P. People look at Elf right now and they're like, wow, high forward P. They can eat that up very, very quickly. If they go up on their products just a little bit, what that will do to that bottom line and their profitability will explode. And so, anyways, it was hard decisions. I like all my stocks for the next 5 years, but yeah, I was shocked when I went through that exercise as well, because I hadn't really done that in a while. And I did that exercise, and I was like, dang, Elf actually won. Who would have thought it, man? Okay, guys, appreciate you joining me as always. Much love. If you're looking to learn from me on a much deeper level, click the pinned comment down there, fill in an application. We can probably get you in next week into the private group, access to all my best course curriculums, 6- and 7-figure Discord chat, see the moves I'm making my $2 million plus Fidelity account, all that good stuff. Much love and have a great day.